I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah.
Hi, and welcome back to The Conscious Day Trader. My name is Yanis, and today we're going to break another trade on the pound dollar. We're going to look at the entries, at the management of the trade, at the exit. As you know, I trade ICT, especially the 2022 mentorship, fair value gaps. We're looking at previous daily highs. We're looking to see if the price is at discount price or premium price. We're analyzing the weekly. As you know, in the last video, we did a forecast, so we can have a quick look on what happened on that. Last video was a bit different than your normal. This one is going to be you're more familiar to what you expect from me, breaking down the trade. I was so blown away by the response of people when, I asked a few questions to the community, and I said, is this useful for you guys? Should I be continuing doing these videos? What is this channel becoming? And overwhelmingly an enormous amount of messages on how helpful this channel has been to people in passing challenges, in breaking down and understanding a bit more how ICT and fair value gaps work. Also motivation about people seeing the profits and saying it's possible, leaving their current 9-to-5 jobs, not that you have, but it's potentially something that you can do. So I was overwhelmed in terms of the support that came in after that video, and it's really motivated me to continue doing these. So that's why we're doing this video on a Saturday, because it feels fun. It feels exciting. I'm looking forward to providing this to you guys. So without further ado, we're going to jump straight onto analysis day. No more ICT monologues. I don't want to become an ICT monologue. We're going to jump onto MT5, and we're going to look at the results. Very, 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 very clean day. And normally that happens after I've had it's quite interesting actually. I'm going to show you a little bit about my repositioning today and how patience can really pay off. This here, $451, only 2 positions. Pretty much perfect. 20 pips, 23 pips and 23 pips on each one. 46 pips in total. Now I traded short the pound dollar, and we're going to see that when we go on to our trading view. But first we're going to jump on TradeSync. And here we are on TradeSync. As you know, we're having another great month so far. We only 2 days on that first week that we traded, so we got $1,000 there. 2,000 on 37 trades, so decreasing the trades, 25 on this trade, even though we had quite a difficult trade to manage on the 15th and 16th, but we did well managing that with repositioning. And 2 trades on Friday, excellent trade there to close the week. I'm super excited for this because, a 5-figure month is still in play. I'm going to show you, actually, this is my funded account. I'm currently, if we jump onto the Fivers, they've got the new dashboard, which looks like this, and you can see how many trades you've taken. This is on my latest challenge, well, milestone if you want. This is a funded account, and you can see my best profits, my biggest loss, pretty much even on that. Largest pip count. We also got where currently is the account. My next milestone is to receive a 200,000 account. Insane. And I'm super happy with that. With withdrawals, I'm going to take it at the end of the month. As you know, I took a 5K withdrawal and it was super fast. So happy with this. I'm available. You can see my profits on the account is 13,182. That's after taking $5,000, so we're way over 20 grand in profit. Net profit available for payout, we've got nearly 12,000. Obviously, I'm not going to take all the 12,000 out because I want to keep. I need to manage this big account. Don't chase the money. The money is there. Think of it like a bank account. You want that bank account to have some security. So when you're pulling money out of that bank account, make sure that you've got enough. If you have a bad trade, like I had on Wednesday, it didn't really affect me because I have the room to be repositioning and getting out of trades with good profits. As you can see here, we've got our profit. We're at 60%. of that milestone. So another 40%. I normally, it seems like 1 month to receive the extra account. So what's that? That's like 5-6% on each month. So great performance there. You can see our win rate is about 70%. It dipped a little bit because we had to do a few more repositions on Thursday, and gross profits, gross loss, and the not profit, and so on. So some people hate this. I don't really mind it. It's okay. Like you get used to it. Maybe you can change your days and see that the previous one had a little bit more information about your daily. Maybe I'm not familiar with this, but something to track and see that line keep going higher and higher and higher, because I haven't hidden this. I really want to hit. I'm not going to minimize myself on what's the limit. The sky's the limit. So we want to go as high as possible. I know they give you a 4 million account, so why not? That is what we're looking for. I don't know if we know any traders. If you are out there and you trade a 4 million account for Fivers, get in touch. I would love to connect, but I'm going to try and do that. And that is my goal. So there you go. You know it. And I am sure I'm going to reach it one day. And that's how you need to think. You need to bring your mentality, a winning mentality. Don't doubt yourself. As soon as you doubt yourself, you've already lost the game. And that's what we're not going to do on this channel. You're not going to hear me do that for you. And I'm so happy because a lot of people have changed mentality around their performance. And I'm getting messages. I used to lose all the time. And now I've passed my phase 1, passed my phase 2, funded account. And I'm like, yes, you can do it. This is, it's not a dream. You can physically change belief into action, and you can do that every step of the way. And in this community, you're going to get that support from me and from also other people that think alike, and we're going to do that. So let's jump onto our trading view, and we're going to go onto our pound dollar. Bit of Saturday special. We're going to trade our trade from yesterday. I wish my days were so easy, right? You have the bad days, but you see a setup and you're like, yeah, this is looking good. Do you remember what we said about this is not an order block, this is just a black line? Let's remove that not to confuse people. And we identified areas of interest. If you see let's break down a little bit of what we've got on the graph. If you follow me on every video, you know exactly where we are. Because we've added this ICT midnight. You can hide it and toggle it on. It gives you the midnight. So you can go from, this is the London midnight, all the way to the next London midnight, and you can see what the price did. It actually gives you a bit of the power of 3, where you have the Judas move, you have the open, Judas move, go to the direction and close below the direction. That is the power of 3. Judas, distribution, and then close around the high or the low of the move. So I like that. Just keep an eye on what price is doing. We can toggle that off. We also have, I normally put in, that I haven't got it here, the FX markets sessions, and you can toggle that. I normally just have the London session. If I'm trading the New York, I have that in there. Sometimes it resets and it's really annoying. So you have to go back and reset. If you're on London time, my kill zone, I also look at Frankfurt Open, which is the pre-open of London. That's when the market starts trading in Europe. And we go until 10 o'clock, which is my sort of London kill zone. I normally have this as red. And if I'm not trading New York or I want to see New York, I just have that on there. You can see I've got Tokyo on there. I just need to go down and take out the Tokyo and Sydney. We've got our midnight, which we've turned off, so we can see that. And now we've got our session here. Right, let's have a look at what we knew. Let's go and put in our trades that we took. I pretty much got identical trades. So 1, 2, 1, actually identical trades. And that tells you a lot about spreads, right? On the when you've got whoever you're trading with. I traded the Fivers, so you can tell that obviously there is a little bit of, not manipulation, but they give you a certain price. And if it's anywhere near that price, they will give you that spread and provide you that. There's no way I clicked twice and got exactly the same price. But Here we go. And as you can see, the profits, even though I closed it, I right click. I don't know if you know this. On any live position, you can go right click and it comes up with multiple. You can do a multiple. I can't remember exactly. I think you have to have a live trade on to see it. Let's see if we can see it here. Bulk operations. There we go. And I close all positions when I'm happy with what I've done. And obviously, one position closes a little bit like milliseconds before and after. So that's why you see the 29 and 31, even though the profit was closed at the same time. So what we got, 1, 2, 1, 4, 3, 8. So there we go. We got our entry in. I normally put best and worst entry, but they're identical. So there's no point to look at this. This is key now, right? You're going to get some information, inside knowledge on how my brain thinks and what I call repositioning. With all these things that you bring something, your ideas around how you manage, I am sure someone's going to take this and relabel it and call it something. But repositioning is so boring that it's going to be so obvious if someone starts using it and calls it repositioning, then we know where it's coming from or what they're talking about. So what I do by this, why I'm talking about repositioning, and I think I could have traded this a little bit better, but my psychology was a bit, I was a little bit hit, I would say, for my bad trade on Wednesday. I'm human. I have a good psychology, but obviously everything affects me. It's human to be affected by results. And did it affect me? What it did affect me was that I would normally re-enter a position here. And what happened is I didn't add into this position. The positions went against me here on 30 pips. So roughly, what is it? $400 to $500 or $600. I would normally place an order in that and trade that down back into this, which would have paid me, and I would have closed. This would have been my reposition. And if I wanted, what I would normally do is hold these top positions and kill this, my reposition, and trade it all the way down. I would have targeted that probably there. So 75 pips. Did it give that? I don't think it did. No. So that would have been me gaining. Either I had to close positions and trade it this way. But let's decrease that brightness because I've got like an aura now, like an angel aura. Okay, so the last time we've done that, you can see me a little bit better. But now we've put the entry. What we want to see, I'm going to break it down from the daily, how I got my bias, if you haven't seen the previous video in the forecast. But what we want to see is, why did I enter here? So let's look at the entry. What we had, if we go here and extend this. So what we had is we had a fulfillment of a fair value gap on the left side. I need to decrease my screen so you can see me. What we had is a fair value gap on the left side. This is the previous London session. We had a big fair value gap on the 4 hour and we had a small fair value gap on the left side there. We also had the previous daily high. So let's, in terms of how we set these markers in, let's close everything in terms of what's in the way so we can see. We added the previous daily and I go onto the daily level and we would discuss this already. We looked at this Fibonacci retracement, right? So we had this move have been down all the way, retraced to the 50%, came back, touched 38. And then we predicted and we said, if this is going to stay below the 50%, it's likely that it will come back down to retest the 23.6 and give another chance for this fair value gap to be filled for the long side, right? So I do like the short. If you want, we had a double top and came down and found support around that 38 too. I wasn't anticipating this push up. I thought we're going to break down into this fair value. Obviously, it took out liquidity below this at the 38 too. Why? As we discussed before, what's resting below here? Sell side liquidity. Why? Sell side liquidity because we know that people that have been long on this huge move all the way up, and let's put our sell side liquidity from down here. They're going to be taking profits, and to protect their profits, they're going to be taking it either below the 38.2, which is a Fibonacci level, but also this swing low. So you're going to be trailing your stops. And some people, you don't want to give away profits, right? So you're going to keep that stop quite tight around this swing low. Why? Because you don't want to give any of this profit. You don't want to put your stop loss down here, so you lose another, how many pips that is. So let's look at that actually. So you got another 100 pips. Why waste another 100 pips of a move? So you would put that stop quite high up. And what has the market done? The algorithm done? It's like, okay, I know roughly where you're going to be placing those stops. So I'm going to come and take those stops out and go in the opposite direction and distribution. And that's what we've seen since Tuesday the 7th of March. We have that re-push on the long side. It comes up. Where does it stop? It stops above buy-side liquidity. This buy-side liquidity, we moved it. This was the buy-side liquidity above these equal highs. Took out that buy-side liquidity, came down, filled fair value gaps and a physical gap. So it took out that physical gap, which we normally put in blue. And you can see that if we go down the time frames, and then traded back up. Where is it targeting? Potentially, I thought it's going to push up higher. Even though I was trading short, I was planning that this is going to be coming into this buy side liquidity, and if there's a real directional move on the day, potentially can go onto this liquidity here and eventually in the tops of this move here. Why? Because it would be trading up to the 61.8, and we know that Fibonacci levels hold, and yes, this is not discussed in the ICT 2022 mentorship, but I do combine my fib knowledge around retracements that I've acquired from different traders like the Scruffy Trader, even when I did my first ever course, which I did the Thomas Crowler course. These are things that I did pick up. So I use them, I bring them up into my trading, and I like using them. ICT will always use the Fibonacci with standard deviations. So you will see one standard deviation away, or the market is going to move 1.5 or 2 standard deviations. And that gives you a measure. It works really well, because if you think about it logically, the market moves, or sort of there's efficiency in the market. So the market will move in sort of 1-2 times what it did in previous weeks, previous days. So the standard deviation can work really well, because it looks on how far that move can go, and it does get nice retracements. I do have it in here, and if you want to have the Fibonacci retracements and the standard deviations, what you can do, I'll show you my template. ICT, I put 1, 0.5, 1.5, 0.5, and 1. People do the 2 as well. So that gives you, if from that move, that will be 1 standard deviation away, and 1.5 standard deviation. You can keep going, 200, that will be 2 standard deviations, and that way you can measure a move. So from like this move here until the low of that will be 1.5 standard deviations away. That's 1 standard deviation away, and you can move, look at the Fibonacci levels like that. Okay, so that's a little tip on how to use the ICT 2022 Fibonacci tool, and you can change it to do that. What we're going to look now is actually of my trade. So we've got our previous daily high, which I set on the wick there with the previous daily high, because that was Thursday's candle, and the previous daily low, let's kill that one, that's the previous one, previous daily low down there. This black line is where I thought the market is going to stop, and it stopped pip perfect to 120 and 100 when we were in that bear trade, and we traded out of it. Also, it filled this gap that we talked about, and now pushed higher. As we discussed, it didn't reach that buy side liquidity. We'll see if it does that on Monday, in what direction the pound dollar is going to be trading. We also have another line, which is equilibrium, and that would give us what? That would give us from here, equilibrium to the high of the previous day. You should know this by now. This is your premium price. So the price was trading above the previous high and into a premium. So I like these trades. I like trading against premium price and discounted price. So going long on discount and going short on premium. So we move that down. This would be discount because it's trading downwards into the previous daily low. Ideally breaks the previous daily low in the beginning of the London session, creating a Judas move if I want to go long. And if I want to go short, I want to see the break of the previous daily high aggressively, creating a premium high price that I want to take to short it back into equilibrium. Price likes equilibrium. It will always come back and retest these levels. If it doesn't, let's say it's broken like here all the way up and you're trading down to equilibrium, it might not give you equilibrium, but it might give you previous daily high. And that way you can get you're still in a premium price. So you're still in a safer trade than you trading long in or trading long in an extreme premium price. So if you were going higher here, when you know that the previous daily low high is here, you're really pushing for that profit, whereas you know that the price can retrace. Yes, there are days that you get trending days like this. Look at this candle here. So the previous daily high would have been, the low would have been here. The price broke low. It came back close to the previous daily high, but it didn't quite get there. And these are the days where you need to trade out of that bad position. And it happened to me on Thursday, and I traded out of it. If you know, I was doing a copier as well, a copier with a very small account, and that got margin called, so I had to deal with that. But I've pretty much gathered all the losses from my other accounts, so it's okay. We'll make that account a little bit bigger. I got in with 2,800 and traded it like I had a huge account. Stupidity. So that account will need to be like 10,000, 12,000 to be able to do what I'm doing on my funded account. And that's what I'm going to do before I start using the copier again. I might do some manual trades. And here's a little tip. When you're trading a second account, in my repositioning, what I'm planning to do is I'm not going to be going in on my first entry. And that decreases my risk on my second account. So if I'm repositioning on like we discussed, or as it going against me, I'm getting a better price, repositioning my lowest price, I'm going to start on the third reposition. So this is when the price is going against me. So I'm getting a super premium price to short. And technically is a lot safer because I'm getting, 20, 40 pips a better pace starting on the other account than I am with my main account. And that way I'm making it safer for it to have a better trade. Whereas this, I don't mind getting a worse trade because I can manage out of it. Okay? It can take that heat if you want. And that's why it has 100% win rate on all days since January. I haven't had a red day on the Fivers account. So these are little tips about how you can manage multiple accounts. And we're going to look into that when I start trading that way as well. But let's go back into this. So we've got our previous daily high, previous daily low. We've got equilibrium. We talked about that. We talked about the 120 and why it likes round numbers. Algorithms work on round numbers. Big institutions like big numbers, and it makes it easy for the maths as well. The gap got filled, pushed back up, failed to take buy side liquidity, and now we're going to go in the detail of the trade. Let's see. So let's go back into the opening hours of the London session. So this is 8 o'clock, 7, 6. I was looking at this around 6:30 UK time. That's right. What did I see here? I got in on this fair value gap here. So what we had a huge move on the downside. We want to trade this down, remember. Why am I trading this down? And we talked about this bias. Because we think we're in premium, we're above the previous daily high. The price has it did provide that sell side liquidity, taking out the liquidity out of that move on the daily, which was quite nice and clean, like we discussed from the daily. pushed higher, gave us a nice entry. This was amazing price action. ICT, fair value gaps got filled, sell sides get taken out, came back down. Look at this. Boom. Fair value gap hit on that level there. Fair value gap hit on 50% of the fair value gap. It's like magic of this fair value gap here. That creates the previous daily low. Boom. All the way up. I traded that up to here on my Thursday trade. And I waited patiently to see what happens. Consolidations, comes back down into a fair value gap, pushes up all the way up above this previous daily high. I thought it's going to be coming up to this area here and taking this buy side liquidity out. Why? Because it's close, and like we said, if you're short on this move, where's your stop going to be? Break even. So that would be another area of liquidity where the price might want to come and take out. But the biggest that we wanted to get in was this one, buy side liquidity. If you like tight stops and you're ICT trader, you can take this, look at this risk reward. We're going to see if it takes it out, but that's why I don't like tight stops. But ICT trades with very tight stops. He's a bit of a magician. How he does it, I'm not sure. He knows his entries. He's got so many tools in his toolkit where he uses to get entries. But let's say you took your stop loss above these and you gave it a bit of room. So you took it above, let's say this fair value gap, above this fair value gap. This, in terms of pips from your entry, 25 pips, that might be huge for you, right? So you won't be entering around the area where I'm entering. I have to deal with this sunshine. Sorry, you're going to see me like an angel today. But you're looking at the graphs, which is most important anyway. So you might not want to take 25 pip stop. And you're like, Yanis, you took this entry. How am I taking your entries? You know me, I trade with wide stops because I trade with a fixed stop. I don't do risk reward. I know that if I'm going to get hit by 2,000, 2.5 grand, that's me done. I'm going to kill that trade. Per position. So I wanted to get involved with this idea. However, this might not be your area that you can afford. So what do? You wait for the buy side liquidity to be triggered. Yes, you might miss my trades, but if you get in anywhere around this area here, and if you go, this is on a 15-minute, if we look at it as a 2-minute, it gave you that opportunity here, broke down here, we had a break up, came back up, filled fair value gaps, probably on the 1 minute. Let's see if there are any fair value gaps that would give you an opportunity to get in. Well, you can see it. If you can't see it, go back to 2022 and do this again, because it gives you some clear fair value gaps, and I'm going to show you which they are. I'm just giving you some time to spot them. So let's say you wanted to go short here. Where would you get in? What are you waiting for? What's the confirmation? 3 things. We want to see a break of structure, change of character, and we want a fair value gap to come in. Change of character is when lower lows are created and higher lows are created. What we want to see in terms of breaking the lows is a strong directional move in the opposite direction of where you are. We had that here, and then the price came back and retested into this fair value gap here. I've given you enough time. You should have seen this. That's one. It went and filled exactly that fair value gap, pushed down all the way down here. How much is that? It gave you from the top there to there, it gave you 3 pips profit, or 3.5 pips profit. Came back up, and what did it do? It came back up and filled the whole fair value gap. That's your second entry. These areas here. We enable these. We're on the 1 minute, so I've got 1 minute fair value gap and 1 minute fair value gap. There we go. So we had 2 areas where the fair value gaps got filled. You would have a nice entry. So you've got 2 positions. One is better than the other. If you're trading like me, I like to kill bad trades. So if I got a position here and that came back to this one that I had entered, I would kill that and wait for a better price, which it gave it here. And then I would have 1 position here and 1 position here going short. And that would have given me a total of 6 pips. So I would still wait for this trade to break down, and it would have done that. Let's go a little bit further. And there you go. How much is that now? We've got 2 positions from the top there. 7.9 pips, so we're getting closer. Boom. Delivery of, that should be 10 pips. 2 times 10 pips, that's $200. You can either kill that. Why? Because you're coming close to that area here of the swing low. It's filling these fair value gaps here nicely. It filled it here all the way down and then reacted. Now, if you're like me and you wanted a bit more of that trade, you would let it run as long as you're not going to get stopped out. And that's why I can't trade with tight stops, because you see this. Look at this, boom, all the way back into that buy side liquidity. If you're trading ICT and you want tight stops, this is where you are. So that provided, you might be happy with this. You might be happy with a 9 pip twice, like we said. If you're trading on a 2 lot, that would be $400. So that might be your trade per position, that is. Then it comes back to buy side liquidity, gains all that liquidity, comes back down, fills that fair value gap, consolidates for a long time. And as we can see, price delivers what you are looking for. Now you're like, how can I trade this? This doesn't, I would be out of this trade. But you see that would have given you 26, 30 pips on a 1 lot. So you're looking at $600 on that trade, just with the 2 positions. Do you see why I don't like tight stops? Does that make sense to you? What heat do I have to take? I have to take a heat of 20 pips. This might be scary for you, but you have to remember, where are we? We've analyzed this. We're in a premium position. We're targeting that buy side liquidity. We know that the market is going to go and take that liquidity. We should be calm at this position. If your position size, you're not comfortable with what the price is doing, so you're seeing the drawdown and you're like, oh, I don't like this, it's $500, $1,000. You need to decrease your lot size and slowly progress, the calluses, the mind calluses and your psychology to be able to take these. Because your market, you're not gonna be a sniper. You're not gonna be able to predict this is gonna go down here in one move. That doesn't work. You might be a genius like ICT, and you know is going to fill this gap at this area here. Yes, you can see it retrospectively and say, wow, that took that fair value gap and then boom, in the right direction. And if you were long on this, you would have made roughly 25 pips. That would have been another trade. So if you were long and short, you would have made good trades on this. What I'm trying to say here is you need to, depending on your level of entry and execution, if you're like an extreme sniper where you can see this and you can calculate it and you've got basic understanding of what the goal is. I did have this buy side liquidity, but as I told you, my bias was short. So I wasn't comfortable taking this trade. Was I comfortable staying in this trade? Yes, because my analysis is playing out. I wanted the price to come up here. Now, the worst thing the worst thing of this trade, I'm super happy with this trade because I was very patient. My exposure wasn't too big. Why? Because I didn't aim to reposition these trades. I just kept it. And normally what I would do, I would get in here with this buy side liquidity, wait for this break here. I would have probably got into that fair value gap there. Look at that. Perfect. Gives you one opportunity, comes down, second opportunity, and then distribution. This doesn't get cleaner than this, guys. This is like ICT mastery right here. And we're so thankful for him to show us this information. So if you wanted to play safe, like we said, and you didn't like this setup, it gave you that setup after that analysis here. But I'm comfortable to sit in heat, so I don't want to miss this move. If this move, since we're in premium area, and we've cleared that fair value gap we saw on the 4 hour, and we're pushing even higher than that, I am expecting this to happen. I'm even expecting this to go all the way up here, and I'm going to have a plan to get out of that. What I'm happy that I didn't do is that I didn't get into this trade, because that showed patience, and patience on a big account is amazing, because yes, I didn't take a lot of profit here. I didn't want to take, what was this, 10 pips. That was $200 in profit. I didn't kill it. And it went to $300, I remember now. $300 in profit. I want to hit above 400. So I waited, it went up, patiently waited through this. London Open, boom, delivery. Up to 9 o'clock, kills in time, around 10 o'clock, distribution, all done. I'm going to have to deal with this sun, but I think that was a really good breakdown of the pound dollar. I hope you found it useful. We are back. We're only looking at trades, and I know you're getting a lot of value of this. Who knows how this channel is going to progress? The more the community builds and builds, maybe we get a Discord in the future to discuss these trades and so on. Maybe we do some live trading. I know a lot of people want to do live trading. There is a downside to live trading, because there is I know there's a few people, and they've texted me. Twan, I can't remember the other. I don't want to miss any names. And Michael, so many messages that came through. Tom, all these guys with amazing messages. The Money Mind, I think is the other one. So many. I'm going to share them on Instagram so you can see them. All these guys, I understand that they would find value in live, because they would see me do the tape read and how I manage my trade live. But there's a bunch of people that they're going to want to take the trades that I'm taking just for the profit. And I don't want that, to protect them, because they can't trade like me. Then no one's going to ever trade like me. You're going to trade like you. And that's the goal, is to take what I'm saying, take what other traders are saying, ICT is saying, and make it your own. You have to become your own trader. And that's when you break it into that 1% of success, and you break that loop. Because everyone says, follow this strategy, buy this strategy, and it works. No strategy, all strategies work and all strategies don't work. And it's around the pilot. If the pilot is solely looking at the information of the strategy and is flying that plane, what happens if the weather is different, if the environment is different? Every single day that you go to market, the environment is different. So you can't use the same strategy every day. You have to evolve your strategy to be adaptable to different things. The pound dollar did a 30 pip move in 10 minutes yesterday, on Friday. When was it? On the other day, it did 15 pips. That's a different environment. It's moving a lot slower. You need to be able to adapt to that. And that's the key thing. Yes, we have strategies to enter, to exit trades, and to manage, but that's just a framework. It's not your way of trading. And it goes a little bit against, writing down the rules. I will do this when I see this. When the RSI is here, I'm going to do this. When the Bollinger Band is doing this, or the moving average is doing this, yes, that may work in a certain environment and condition. You need to be able to change certain things when the environment and the conditions are changing. And that's what is key to making you a successful and consistent trader. And I'm going to keep saying that, because I want to see you succeed. And especially the people that I've mentioned, the people that are not here to receive signals, they're here to improve their trading. And that's what we're doing it for. Right, there we go. That was a pound dollar trade. Make sure you follow me on Instagram. We're a big community here. The Instagram is growing slower. We're about 600 people on Instagram. So jump onto this one here, conscious.daytrader. Ignore the fakes. I might have to do that new thing that Instagram has for $15 a month to make it like this is the original, so you don't get all these fake people scamming friends and family. I'm getting so many messages that people Why are you asking me for money? I'm not asking anyone for money. I'm good. So there we go. I hope you have a beautiful weekend. And as you can see, the sun is shining. Everything is good. Thank you everyone for so many nice messages. I really appreciate every single of that message. And I read them in detail. And we're going to be back on Monday with another ICT 2022 mentorship trade and a bit of Yanis management trades. I try to drip feed some information around my repositioning, and I hope it's helping. I know some people are really getting it and they're trying it and back testing it, and that's really good. And making it their own, that's the key thing. It's not how I do repositioning, but how do you understand repositioning and implement it into your trading to become a successful trader. Well, there we have it. Have a good one and see you on Monday.
I can't take no loss. I don't even know what it costs. I hit the ground, then